Let's take a look at some charts on Aave for Brave New Coin. So Aave is a decentralized lending and borrowing platform on ETH. Most people at this point are aware of how this works, but you can deposit various assets into the Aave smart contract. At this point, they've got at least 20 different markets. They have variable APY, variable borrowing costs, depending on supply demand. So all this becomes highly gameable at some point if you are into low risk versus high risk, borrowing, lending, smart contract, attack surface risk. All this stuff is in the conversation, but I think for a lot of people outside of crypto, stuff like Aave is attractive because the yields, the interest you get off of USDC or DAI, which has very little volatility risk, is much higher. The yields are much higher than anything you get in legacy. So I think stuff like Aave, this lending and borrowing market, is fueling much of the USDC prints, the USDT prints, as legacy institutions are onboarding into crypto and migrating to these lending and borrowing markets, which I think for many people have, in general, very low risks, despite being rather new. I mean, obviously Aave is, any smart contract has risks. There's risks that ETH is going to be ETH, right? There's all these risks, but at the end of the day, the market appears to have decided that those risks are negligible compared to the reward, which are these lending and borrowing gains. Aave also offers flash loans, which are highly complex conversation in and of themselves, and in general should be used for stuff like arbitrage or refinancing. Historically, though, they've come into the news because of their exploit potential. Really, on other platforms, I don't think Aave has ever had a flash loan exploit compared to any other platform that has lending and borrowing with flash loans. So Aave's TVL is currently 5.4 billion. You can see that's waxed and waned a little bit, but since January, it's exploded, obviously, with everything in DeFi. That's really when this stuff took off in a big way across any chart that you're going to see. And in general, the health of the ecosystem is kind of dependent on the TVL, just as a sentiment metric. You know, if everybody's bullish on DeFi, you're going to see TVL go up. You're going to see confidence in stuff like this, in lending and borrowing go up, yields, all that stuff. It's just going to keep going up and up and up, so long as there's confidence in DeFi. If we zoom into the 90-day stuff, you know, you can see this mirrors the price of Aave very closely. So it's no surprise that this stuff is important as just a metric of what's going on. If we look at the transaction counts and average transaction values, before it was Aave, it was called Lend. They migrated in October 2020, kind of over time, into Aave from Lend. There's still some Lend transactions, looks like virtually nothing. 100 or so transactions per day on Lend. So pretty much everybody's migrated to Aave at this point. Aave transaction sizes are increasing along with transaction counts. Transaction counts peaked for the token itself in early February, and it's no coincidence that that mirrors ETH fees very closely. This is average ETH fees on the chain, which peaked in mid to late February. And along with everything else in DeFi, ETH fees are highly important because it determines what people can do in DeFi. If fees are rising, fewer and fewer people participate. If fees are stable, flat, declining, more people are encouraged to participate. So if ETH fees can go down in any way for whatever reason, I expect Aave to remain bullish and stay bullish. So it's highly, highly dependent on ETH fees. Now you'll see some of these lending and borrowing platforms or swap platforms begin to migrate to other chains. And if I'm Aave, I don't really care that I'm on ETH or I'm on EOS, Binance chain. Like, at the end of the day, do you really care if you're Aave? Probably not. So long as the risk potential is low, remains low. You know, that likely isn't the case, that risk potential remains low if they diversify their chain a little bit or their base chain. But those are the things, if I'm Aave, you know, if I'm executives at Aave or whatever DeFi platform, I'm certainly looking around to see who else makes sense to incorporate. Because if ETH fees collapse everything around me, you know, there has to be some other out for me if I'm some big DeFi platform. If we look at NVT and the line here, inverse metric of economic utility, that has remained low since January. Active addresses spiked with transaction counts. So collectively, all of this stuff, again, just highly dependent on ETH fees. If ETH fees hit a new all-time high again, I think a lot of this DeFi stuff is going to struggle immensely, just because it doesn't make sense to even bother playing in the sandbox if you can't afford sitting in the sandbox. Right? If you can't afford the shovel it takes to dig in the sand, you're not going to be able to participate. If we take a look at Google Trends specifically for United States, Aave is a Finnish word for ghost. So you're going to get a lot of noise here on the signal, but since 2019, you can see that Aave searches are up, and this is likely the DeFi Aave, not any other Aave. It hit a peak in mid to early February, it looks like. Again, no real surprises there. Yeah, late January, early February, right? All of this stuff, highly, highly correlative. ETH fees up, transactions hit a peak, active addresses hit a peak, Google Trends hit a peak. It's all coming together now, as the kids say. So it's down from the peak, just like everything else. So all of this stuff is together. And if we move to price, same story, right? We peaked in price in mid-ish February and are sort of making a decision from here. If we look at the 50, the 200 EMAs, yearly pivots, volume, and RSI, we're actually holding above the 50 EMA quite nicely, despite a pretty big gap between the 50 and the 200 EMA, which says price is intensely overbought relative to the mean at this point in time. So the mean is around 200, 220 based on the 200-day moving average, and price is currently kind of 2x-ish that mean reversion target. You can see previously how it's hit that mean reversion target several times and has led to bullish continuation. So if I'm trading this, I'm looking closely at the 50 moving average, daily 50, because if we break below the 50, we're most likely going to the 200-day moving average. So that's a big drop from here. The R5 yearly pivot is also below price at this point, which says price has skyrocketed significantly relative to last year's prices, because these yearly pivots are based off of the highs and lows of last year. So you can always manually calculate R6, 7, 8, 9, 10, or you can just flip to the monthly pivots, because those give you a better idea based on the previous monthly highs and lows, what these support and resist levels are. No bearish divergence here. Volume on Binance looks odd. There's no real spikes in volume here. Everything's really flat. I'm not really sure what that's about. Just look at where the volume was previously and how it just kind of zeroes itself out here. If we zoom in on the 4-hour, so this is the 4-hour 5200, which has recrossed bullish. We're above the monthly pivot. I like the next pivot up around 570, which is basically an all-time high retest. Beyond that, I like 777, some strange psychological resistance, which is also the next monthly pivot up. And no real bearish divergence just yet. The bottom line is I definitely expect higher highs with a picture like this. And if we look at the daily cloud bounced where it needed to bounce on the Kijun here, this red line. It's still above the cloud. Everything trend-wise is still bullish on the cloud. If we zoom in on that on the 4-hour time frame, this is exactly the picture you want to look for when you are getting ready to open a long position based on the cloud, because everything is bullish here except one metric, which is the cloud. So at this point on the 4-hour, you're either long or adding to the long or getting ready to long based on the cloud. You are adding to your long on any dips so long as we're above the cloud, with the expectation that this is going to flip bullish. And if you're being super conservative, you're waiting for the TK lines to be above the cloud. But in a vacuum, if I see this set up on any chart, incredibly bullish. It's on the 4-hour, which historically has had relatively good signals for crypto as far as a bullish continuation pattern. If we look at Aave BTC, it's a bit of the opposite. We are painting a perfect bearish entry, short entry signal. Cloud has flipped bearish. Price is below cloud. TK cross is bearish. So all of this looks like it's ready for a 200-day retest at around 0.005. And this definitely looks like it's not going to outperform BTC in the near term. Until all this flips bullish again, then I would have more confidence that this can have another run against BTC. But how this looks now, definitely not. And the same thing with ETH. It is a few days behind the BTC chart. You can see the likely outcome there. It's likely to move into the cloud, at the very least move to the bottom edge of this cloud, and probably move to the 200-day moving average at around 1.6 against ETH. So all in all, DeFi is all about lending and borrowing. Aave is one of the first movers, one of the best examples of that. It has the highest TVL amongst most of the lending and borrowing platforms. The health of DeFi, including Aave, is largely based upon ETH fees, and we can see that in the transaction data, in the active addresses data, and the Google Trends, all of which align almost perfectly, showing that if ETH fees rise, I am correlating and causating here because I use this stuff as well, and if ETH fees are insane, I just don't transact, right? People are just priced out of the system if ETH fees are too high. Technicals on the USD pair look like they're ready for bullish continuation. Technicals on the BTC and ETH pairs look like Aave USD is not going to outperform BTC or ETH in the near term, even though Aave looks ready for an all-time high retest within the next few weeks here.